George Soros is giving shares of Penney a big boost, to say the least. Stocks up 14% after news broke that the billionaire has taken an 8% stake in the struggling retailer. He is now Penney's fourth largest shareholder. Investors like the news. So what's making Soros so bullish? Let's ask our panel. Sheila Dharmarajan with the story, William Frohnhoefer with the strategy, and Jim Ramelli with the trade. Sheila D., why don't you give us the background first?
Well, Adam, right now, Penney is getting a huge vote of confidence from George Soros' family office. As you said, they have this 8% stake in the company worth more than $250 million. Remember, though, this is a passive stake in Penney. The family fund does not have any board seats. They don't really have any special voting rights or any say on day-to-day operations. But again, everyone now in the market saying, what does Soros see in Penney that everyone else could be missing? Does he believe this turnaround story is going to work? Does the fund believe that maybe there's a breakup happening or maybe some real estate value there? A lot of questions now being asked, wondering what does Soros and his fund see? For Soros and the fund, it's actually a very big investment. In fact, it is their third biggest investment behind AIG and Citigroup. As for some of their other retail investments, they do have very small stakes in Walmart, also Home Depot. In the consumer sector, they have a stake in Shutterfly, but this is really a big retail bet for them. Again, Adam, their third largest investment in the fund.
Putting your money where your mouth is, certainly. William Frohnhoefer, why exactly do you think Soros has gotten so bullish all of a sudden?
I really can't speak to his decision. This is a gentleman who's made a lot of very interesting calls over the many years, so I can't really speak to his process. Our thesis is a very fundamental thesis, and I'm sure he has his process, and we have ours.
And what is your process? What's your take on Penney right now?
Well, I like to look at a company from the viewpoint of the whole capital structure, the debt as well as the equity. And so one of our theses on Penney was that they would be able to raise a lot of capital using their real estate, using potential inventory financing, also potentially a mandatory convertible financing as well. And they would be able to have enough access to cash in order to turn the company around and to stabilize it.
And by the way, none of the debt comes due for 3 years, so it would appear they have a cushion, but they're also spending a lot of money. Cash crunch or not right now?
In my view, these guys have enough cash to operate through the rest of the year easily, given the fact that they had access to their revolving credit agreement. They apparently currently have a committed financing from Goldman as well for $1.75 billion. We believe that would easily take them through the end of the year. We believe they also have the ability to do mandatory convertible financing. So they're not really hurting for cash at the moment. We'll see how the rest of the year turns out.
And losses last year, this year, forecasts for the next several years. Can you find anything that gets you excited? Do you want to take a position in Penney?
Do I personally?
What are you telling your clients?
Well, I'm telling my clients. I mean, at this point, because of compliance, I'm not long Penney. I would like to be, and the reason what I'm telling them, and the reason why I would like to be, is that if these guys are able to return their operations simply to a stable point, not necessarily to any kind of significant overperformance, but to get back to where they had been when Mike Ullman was the CEO for the first time, when this stock was roughly twice where it is now in terms of price. I think just getting back to stability makes it a very, very interesting prospect. I think a lot of the downside risk has been taken out by these brutal earnings we've seen over the past couple of quarters, and now they're in a rebuilding phase.
Yeah, a rebuilding phase. Jim Ramelli with the options trade. How do you trade a stock like this where there's so many moving parts and, frankly, it looks so broken but maybe washed out?
Right, I think rebuilding phase is a really good way to put it here. Soros is not taking an active role in his stock. He is taking a big position. We have the CEO change. They do have good access to capital. However, their fundamental story is shaky at best. All of these things are going to take a long time to help turn this company around. As an active trader, I'm concerned with the short term rather than the long term. So I want to use this opportunity to get short Penney into their next earnings report. The stock does terribly on earnings, selling off 6 out of the past 8 quarters. So I want to look at a short side trade, buying the May 15-14 put spread for a quarter, risking $25 per one lot for a $75 per one lot reward, and a break even of $14.75.
The old 3-to-1 payoff. Sheila D., final word to you in the last 30 seconds.
Well, Adam, he just talked about short-term issues. There is one more to add to the list. Penney now is apparently being sued by their contractors for not paying for their store upgrades in time. Remember, these are the store upgrades that Ron Johnson had rolled out. So one more to-do thing to add on their list, probably the last thing they want to hear about right now.